CLS Weekly Market Review. I'm Todd Clark. Wow, what a week we've had. Last week was the worst for equity markets since September 2011. Concerns about the slowdown in Chinese growth and an interest rate increase brought out the bears. The decline has been fast and sharp. To keep things in perspective, it is important to remember that as of Monday morning, August 24th, the S&P 500 is still above lows posted in October of last year. With all the recent headline-generating activity, I encourage you to watch and share this commentary with your clients. For more, here are portfolio managers Paula Week and JJ Schinkelberg.
Thanks, Todd. So JJ, this last week in the markets has been crazy. We've all had our eyes glued to the screens. What are some of the things that you've been seeing in the markets this last week?
It has been crazy. We have seen the bears come out with a vengeance this week. The decline has been short and sharp, much sharper than we anticipated, and I think a lot of people anticipated. What we saw was that culmination, like Todd talked about, of the Chinese growth being weak, the efforts they're making to weaken their currency, which affects everything across the globe. We're also seeing the fear of the upcoming Federal Reserve meeting on September 17th, where there's been a lot of anticipation that the Fed will start to raise rates. So it's a very uncertain on whether they're going to start that next month or not, but they've certainly been looking at that as a time to start. All of that stuff has really brought uncertainty and fear into the market, and we've just seen that culminating all at once. We have been anticipating a decline for a little while now, and because the markets have been going up for so long, and we have seen valuations rise to higher levels.
Yeah, absolutely. I know that in a lot of our portfolios, we've actually reduced our exposure to equities in anticipation of something like this happening. We've introduced the increased exposure to commodities to help the diversification benefits, all of that. But what are some other things are you seeing that happened as far as clients' portfolios last week?
That's true. I mean, we have done some positioning and anticipation of this type of event. And that lower equity exposure has certainly helped us a lot this week. But we do see when markets do capitulate like this, we see all equities just get go down with the whole market. And so that is going to impact portfolios. But not only is portfolio positioning going to have an impact, but so does the client's risk budget. And that really is what the client's going to see the most. It's important for the clients to set that risk budget for the long term. And when we saw the decline, if a client has a lower risk budget, their portfolio should not go down as nearly as much as others with higher risk budgets. And that will be the single biggest factor affecting client portfolios this week.
Absolutely. And I know that this is about the time when we start getting phone calls in, potentially asking for clients to lower their risk budget score because they have that fear and uncertainty starting to take hold. And this is the exact wrong time to be making that kind of emotional decision. And so it's very important for us to try to help coach clients to try to keep focused on the long-term risk objectives and return objectives. So.
Absolutely. The market is a yo-yo going up the stairs. We're going to go up over the long term, but there's going to be these sharp ups and downs that we see along the way.
Yes, absolutely. Well, for more information, please check out JJ's Weekly Market Review.